Investors are tiring of the US dollar. They're pretty disillusioned by the bursting of the Trump trade and unwilling to hold too much store by this week's hawkish tone of Federal Reserve Chair Janet Yellen. But the dollar currencies of Canada, Australia and New Zealand are proving harder to ignore. In the past few weeks, the loonie, which is the name for the Canadian dollar, has gained 4.8% against the US dollar. The Aussie by 3%, the Kiwi, the New Zealand dollar, by about 5%. No doubt the US dollar's weakness is contributing to the advances of these and other currencies. But their own economies are far from idle. The rate of their growth is strong and causing surprises. The Aussie, for example, jolted upwards on the back of another stellar month of jobs growth in Australia. So the cautious do-nothing positions of their central bank policymakers look harder to maintain. Canada is the first to move. The Bank of Canada this week signalled the end of easy monetary policy and a switch to normalising rates. The loonie is on the march, and this against the backdrop of falls in oil in its major product. The loonie is usually highly correlated to Brent crude, and Canadian economists are mindful of how the 2014 oil price shock hollowed out the Canadian economy. But the price of a barrel of oil has stayed in the range of about $44 to $54 for the past year, and Canada has learned the lessons. Its economy is better balanced by the rise in service industries like computers, financial services and air transportation, and jobs growth in tech. Don't expect, though, shifts in monetary policy from the Antipodean central banks. Australia's economy is linked to China, New Zealand is dependent on dairy, and worries about the housing market and personal indebtedness in both countries mean probably no shifts in monetary policy, and the same is probably true for European central banks. But at least Canada is off the fence, and as the world seeks a shift away from quantitative easing globally, that at least represents a start.